Good morning and welcome, Patriot Radio News Hour. Joe and Jason on this Wednesday. Our toll-free number, 800-951-0592. The website at allamericangold.com, and keeping you in the know to what you really, what you really need to focus on. Forget about homers, right? We get it. Right? They're going to tell you the best things possible, right? Because, well, hey, that'll allow us to extend the game for a little while longer. Today we got a great show lined up for you. We're going to be focusing in what happened in the Treasury market. We have record debts in let's face it, with the exception of the year in COVID. By the way, the debt really was $2 trillion. Actually, it was over $2 trillion. I know they keep saying, don't they really want to keep telling you it was only 1.7? And gosh, guys, it wasn't that bad. It only went up $320 billion. Right? So it's not that, from 2022. Well, the realities are there was a lot of paperwork gimmicks going on. The 2022 deficit, now you think about it, we just came off these massive COVID spending years. The deficit for 2022 factually was just over $1 trillion. The deficit 2023 factually was just over $2 trillion. So really, outside of a paperwork gimmick about student loan debt, the deficit doubled in a single year. And of course, we know the Treasury has been issuing trillions of dollars of debt, and they just came out with this big announcement, hey, we're going to issue this much debt in this quarter and this much debt in the next quarter, and seemingly yields fell. Matter of fact, they've fallen to about 4.5. They went from almost 5 to 4.5. What gives? Everything's okay. Right? The Dow went back to 34,000, right? It was 33,000, 32 and change. Well, now it's back to 34. Everything's good, right? Crisis averted. That's what they'd like you to believe. But this is why you tune in right here. Because we're going to tell you exactly what the Treasury Department and its advisory board. Oh, yeah, they've got an advisory board. Who sits on that advisory board? Oh, yeah, the bankers, the dealers of the auctions. Why do I have the feeling that a lot of banks made a lot of money going against the bond market because they knew exactly what was going to happen as everybody else was shorting the bond market, which means, hey, yields are going to go higher. The banks played a little trick. I'm going to share that trick with you. And again, I'll tell you right now, I want you to look at this positively. Well, why would I do that? Because it allowed for gold to fall a little bit. I mean, 1960, hey, I'd rather buy gold at 1960 than 2,000 or 2,100 or 2,500 or 3,000. So view this positively. Our toll-free number again, 800-951-0592. We're going to have another great special. Jason and I talked today. We're going to start heating some stuff up here as we get into the holiday season. We're going to do some really cool stuff, some different stuff as well. All of that's coming here over the next, 5 weeks or so. So stay tuned for all of that. allamericangold.com is the website. But Jason, yeah, very interesting what we've learned after the Treasury said, well, we need to sell $776 billion this quarter and $850-some billion the next quarter, and we sold $1 trillion before that. But two things they didn't do. Number one, they gave no guidance for the second quarter of next year, the third quarter of next year. And then, of course, They just conveniently left some stuff out. What you don't know won't hurt you, Jason.
Yeah, I think they leave a lot of stuff out all the time. I don't think their real intentions are ever transparent, Joe. So, but they are the economic wizards of the world. So, of course, they know where things are going ahead of time, or they at least know, hey, if we do this, these are the results. And so, they do what I guess a lot of people would be, tempted to do, which is I'm gonna make some money off these moves. I want to make some money off these moves, Joe. Right? And that's apparently what you're going to be talking about today.
Well, and again, think about this. So originally, now this is what you have to believe. Okay, like I said, this is the ridiculous. It's like yesterday, right? Austin Goolsbee and that ridiculous thing she was saying on TV about, there's a path. There's still a path. Yeah, right. Do I got to show? Well, it's 1 in a million, right? We could win the Powerball. That was kind of Austin Goolsbee, and he was all excited about it. Like, oh, yeah, we can do it. Wall Street expectations were for $114 billion, and you're telling me that everyone got excited because the Treasury said, well, it's only $112 billion. Right, that was the amount of debt that they're going to sell in the next week. So, Jason, this is part of the reason why they gave on TV, why you saw, oh my gosh, only $112 billion instead of $114. Give me a break. Look at these big numbers, and here's the problem. Those two big numbers, the 776, the 850 and change, those were lies as well. We'll talk about that. 800-951-0592. Joe and Jason, Patriot Radio News Hour on this Wednesday. The Dow and really the whole market flat. The Dow's down not even a point. The S&P's not even up a point. The Nasdaq's down 11. Gold's down, but showing a little life here. 1963. Silver. It's up almost 25 cents. I don't even know what's going on. Silver was down with gold. Silver saying, nope, we're going the other way for today. The 10-year note, now we're focusing in on this, 453. Why do I feel like this may be the new bottom here? Right now, nothing goes up in a straight line, but when you can pull off little tricks, right, this is what you can get. When everybody was shorting the market. So just to remind people, shorting the bond market means you think yields are going higher. Everybody was shorting the bond market. Everybody. Well, you can expect trickery when that happens. We got that. Crude oil down almost another $2. This is another interesting market. One of the biggest rise in crude inventories ever happened yesterday. Over 20 million barrels. So one of two things happened, right? Either everybody stopped going to work, which I don't think that happened, or my better guess is a bunch of ships that were supposed to come through the Panama Canal are late and didn't get loaded. That's just my guess. But a huge build in crude oil inventories. And again, if you're worried about, well, gosh, man, I don't want to invest all of my money on Austin Goolsbee, the yellow brick road. I don't want to have to, gosh, are we going to win the Powerball? Do you really want to bet your life's work on that? Or a ship not being able to get through the Panama Canal because there's no water in it? Probably not. That's why we've been talking about. Think about it. Dow's 34,000. I mean, it's pretty much been 34,000. Give or now, obviously, it's been high. Right? It's been 37, been down to 30. But for like the last 3 years, it really hasn't moved. Which really means you're getting your you-know-what kicked. How about a 10.25% return? Wouldn't that sound nice? Wouldn't that be good? How happy would you have been over the last 3 years to get 10.25%? How about last year when the markets got crushed? Check out our friends at YRefi. Invest, YRefi.com. Got to have a minimum of $50,000. You know that they give up to 10.25% returns. You know they don't attack your principal. You know there's no fees. You turn your income on or off. You need at least $50,000. Call them. 888-YRefi-24. Now, Jason, back to this Treasury announcement last week. What happened? I mean, $776 billion. That's a lot of money. That's a lot, especially when you did $1 trillion the last quarter. So, I mean, essentially the Treasury said, hey, we're going to do almost $1.8 trillion in 6 months. And oh, by the way, we're going to do another 850 in the next quarter. And yet people took that as good news? Or did they? Well, there's this little group, and I'm glad to learn because I'm always learning new things. The Treasury, they have a group that meets, and it's the bankers. And I'm going to guess here because they don't spell it out specifically. But my guess is this little group, this advisory committee, is probably the dealers that have been getting stuck with all these auctions. Well, they released very quietly after Janet Yellen's big announcement, where she said, hey, look, we only have to auction $776 billion, and next week we only got to auction off $112 billion more extra instead of 114. Oh, yeah. What? Man, that's great work. Way to go. Yeah. Well, like all things, Jason, the advisory committee, in order to make the Treasury not be liars, came out and said, well, we may have a little fluff in all of this. Specifically, the ongoing rise in government spending. By the way, next week we hit the debt limit again. Government shutdown again. Right? Are we going to do another extension? What are we doing? We don't know. We know the economy's slowing. We know that tax revenues are falling. And, of course, the advisory committee said, well, you know, we may have to issue a little more than that. But right now, as long as the government doesn't spend any more money, this is the right number. So, wait a minute. You know that the president's already asking for $150 billion, right? $14 billion for Israel, and then another $140 billion for God knows what, right? Ukraine, green energy, right? Wi-Fi, right? Fast Wi-Fi for everybody. Got to have your Netflix. And then, though, it got a little deeper. So that was bad enough. Which basically they said, oh, by the way, what we're saying, what Janet Yellen just said, that was a big lie. Right? Jay said, we're not counting everything. But to their point, they made a point, well, we can't know until Congress does its job, so therefore we're going to pretend like it's not going to happen.
So it doesn't really matter. It's going to wait till the government shutdown until something real happens. Well, that's what I'm hearing, Joe, is that they can say whatever they want to say, but that can all change in a matter of days or weeks, depending on once again, it's data. It depends on the data, right? It's always about the data. It depends on the situation. So I guess you could just say whatever you want, and then you can just change it, Joe. Right. So I guess there's nothing really to listen to here. It's all fake.
We were honest on that day. right? Because we don't know. One of the advantages, now think about this. One of the advantages, remember how they got rid of Mike McCarthy, right? Because Mike McCarthy gave them 45 days, kept spending the same. Matt Gaetz and all his guys, no, we want a guy that wants to cut. See, they like Johnson, right? Because Johnson said, hey, we're not throwing out $106 billion. Israel needs some money. I'll do that. I'll do $14 billion. But, oh, by the way, we're cutting $14 billion, and I want to cut the IRS. Did you hear Janet yell? I don't know if anyone heard Janet. You hear her cry yesterday? I mean, she almost literally cried on TV. I thought she was going to cry on TV. You can't cut the IRS budget. Oh, what are we going to do? How are we going to collect from all you deadbeats out there? You can't do. Stop playing politics with the IRS. Give me a break. Give me a break. But wait, there's more. See, then they went on to say, by the way, the debt, it's not $1.7 trillion, as I told you. The $2 trillion deficit we ran last year, and it's going to be bigger this year. This is what the advisory committee said about it. The U.S. fiscal deficit is at the top of the range outside of recession and periods of high unemployment. What does that mean? Well, what they're saying is we can't sell this debt at these high ends. We're maxed out on our ability to sell the debt unless the economy crashes. Because once the economy crashes, right, everyone will run to Treasury. And they're saying we're at the top of the range. Huh. I didn't hear that from Janet Yellen. Did you guys hear that? Matter of fact, she acted like, hey, after the next quarter, that's it. We won't have to increase them after that. Now, she didn't say that. But what she didn't do is she didn't comment. Well, what happens after the first quarter and the $850 billion for that quarter? They implied that they wouldn't have to do another round of debt issuances. But according to the advisory committee, Jason, go figure. That wasn't true either. Holy cow, right? I mean, so again, it's all about presentation. And here's in the advisory committee. Now, I'm going to give credit where credit is due. Zero Heads did a great job in all of this research. And take my word on it. There was, I don't even know how many graphs and pie charts and spreadsheets. But the long and short of what the advisory committee said is all of this money is coming out of the reverse repos, and that at the pace that it's happening, the reverse repos are going to be out of money as early as the end of January. At which point the advisory committee said that they believe that not only will Jay Powell have to stop quantitative tightening, but may need to actually lower rates in order to save an earthquake, which, by the way, one of the Fed governors used last week, describing the Treasury yields drive to 5%. A whole whopping 5%. He called it an earthquake. It was an earthquake. Well, the advisory committee said, we're going to have another earthquake And this one's going to be a doozy, especially if they're right in saying that not only are they going to have to end quantitative tightening, Jason, dare I say they may have to cut rates?
Will they be able to? That's going to be the point. And I think as the reverse repo starts to empty out, I think we'll see inflation coming up. When it's out, I think maybe they can try. If the inflation comes down, but that's going to come with a market crash. It's kind of too little, too late, right? And that's if the inflation goes down after the repo money runs out. So, yeah, earthquake. Yeah, there'll be an earthquake. I just don't know if it's going to be inflation rising because they're going to start printing. Or, okay, we'll lower the rates, but it won't matter because there'll be such a massive market crash that lowering the rates then sounds like a reasonable idea, Joe. So it's all these decisions now are going to be after something happens. There's no preventative actions being taken here.
Yeah, and this is something, again, remember, one of the big things they're hoping is the deficits don't get worse. Right? That's a big part of this. Uh-oh. Yeah, that's why I told you, view this as good news. 800-951-0592. Jason and I will be back. 800-951-0592. Joe and Jason on this Wednesday. And I'm just going to say that it may have been really a single word that stopped a huge debt crisis from unfolding. Because normally when the Treasury releases these statements, they always say, well, we're prepared to rise in future quarters. This time around, they just said, oh, we're going to raise it in the next quarter, and didn't mention anything about the future. Like I said, allowing it to be implied that, hey, we're not going to have to do this again. And I don't know that, I don't even think that that's possible. And this is why I'm telling you, and we've got a time frame now, between now and January, I would be diversifying as quickly as I can. And I mean that because if this reverse repo is going to actually be drained this quickly, I mean, think about it. We ran a $2 trillion budget deficit last year. That's the facts. The reverse repo had $2 trillion in it in January. Sounds like to me, Jason, that would make sense. They'll be out of money come January, right? That would just make sense because almost every dollar seems like it's coming from here. Let's not forget China selling treasuries like that. By the way, man, China's getting really aggressive. They've already announced how much gold they bought the next quarter. Another 23 metric tons. You better hold on to your hats. Yesterday, we had a great special on 20s. Today, we're going to do it on 10s. 1 through 9, 1,090. 10 through 19, 1,080. 20 or more at 1,075. So it kind of puts us at the same price the 20s were yesterday. And here's what I'm going to do. Remember yesterday, for every 20 you bought, I gave you a Trump 1 ounce mug shot silver round. For every two $10 liberties you buy today, I'll do the same thing. I'll get you a 1 ounce mug shot Trump silver round. Great stocking stuffer, right? Great to get out to your, maybe you got a bunch of buddies you like to golf with, right? Great ball marker, you name it. But Jason, really interesting that we had to wait for the advisory committee to come out and say, well, Houston, we may have a problem, but we decided let's not have the problem now. Let's wait till after Christmas, and then maybe somehow a miracle will happen, like Austin Goolsbee was talking about yesterday. Maybe the United States could win the Powerball. Oh wait, that's not nearly enough money, right? Winning the Powerball, that's not even winning the Powerball. Think about it, if the Powerball was $1 billion, right after taxes and everything else. I think you get like $400 million. That would be the equivalent, and I'm ballparking here. Ballparking. Maybe an hour. Let's go crazy. 2 hours of government spending at the most. Jason, this is how big of an issue we really have. And thinking about the enormity of this, how in God's green earth do they actually think they can pull this off? And I don't think they can cut rates. Listen, I guarantee you they're going to stop the quantitative tightening. That's a given. And gold's probably going to be at all-time record highs when that happens. But a rate cut, I don't see that in the how? How are you going to sell all this debt if the reverse repo's empty? The only way you can cut rates, we would be talking about a jobs number where the government's saying 3, 4, 500,000 people lost their jobs this week. I mean, that's the kind of numbers you would need for rate cuts.
Yeah, Joe, that's what I'm wondering. I'm wondering if they're foreseeing massive market crashing and job losses, businesses coming down. Then you can cut rates because the inflation will go away. There'll be no buying of anything. And, we can cut the rates a little bit. Now when nobody has any money, it'll be a little cheaper to borrow. But we know who will have the money at that point. It'll all be the biggest banks and the biggest financial interests, and they're waiting for this to happen so they can just put that spatula in the peanut butter jar and scrape it clean, Joe. That's what this business cycle does. They're hoping to get one more clean sweep of it. But here's the thing, Joe, is I don't think this one is quite like the other ones. I think the big money is a little more at risk this time around. I don't think they actually see it that way. I think they see business as usual. This one's different. There's some big players that are gonna be wiped out. We got more Lehman Brothers on the horizon, Joe.
Yeah, that's something where we haven't even talked about banks, the ramifications of that. Bank of America was out yesterday in a note to clients. I love in a note to clients. Yeah, you got to be high up on the food chain to get a note from Bank of America over the next 10 years. By the way, this is also rose-colored. Bank of America says the debt is going to surge by a minimum of $20 trillion. That would mean that the debt's going to stay right where it's at, $2 trillion a year for the next 10 years, to $54 trillion. They said that U.S. public debt, more than the combined GDP of China, Japan, Germany, and India, saying that outstanding debt, listen to this, the debt is going to surge by $5.2 billion every single day. $218 million every hour. I got news for you. I think that number's going to be a little light. Yeah. Probably going to be closer to, $8 billion every day. Probably closer to $300 or $400 million an hour. That's just the debt. That's not total government spending. That's just the debt. Yeah. Or you can believe the Treasury's nonsense. Oh, no, we're fine. We're fine. Look, we issued $2 billion less. Yes! Good job. Attaboy. Yes. 800-951-0592. Jason and I, we're going to be right back. We're back here, 800-951-0592. Joe and Jason, today's special $10 liberties. 1 through 9, 1,090. 10 through 19, 1,080. 20 or more at 1,075. And for every 2 that you get, we're going to throw in a 1-ounce silver Trump mug shot round. Man, these things are cool looking, great little Christmas gifts. And hey, it's an ounce of silver for the same price. 800-951-0592. And we'll take care of you and get that in for you here. Bank of America. Now, they said the deficit's going to be $54 trillion. And I told you, that's a little light. Bank of America agrees. They said, yes, it'll be $54 trillion. And that's the headline. That's what you see. But when you read into it, Bank of America went on to say, oh, by the way, it is likely that the central bank may simply have to bail out governments in the coming years via quantitative easing and the introduction of yield curve controls. Policies that would be U.S. dollar negative. And of course, again, Jason, saying, hey, the United States will not be able to sell all this debt. So how big is we're talking about the Fed ending quantitative tightening. At the same time, Bank of America is now saying, hey, get ready in the coming years. The Fed's balance sheet's going to go a lot higher.
How much of that do you think they could sell, Joe, if the Fed were to, when the markets get a little more fragile, let's say they just lowered it 1/4 point, one single time. Just one time, lowered it 1/4 point. Would that bring on a rush of buying, like, oh, there's the top of the market, we got to buy this debt now? Would that be something that could be accomplished to kick the can down the road a little further?
That's I don't know. That's a great question. I think for them, what I heard from the advisory panel simply was, we can't sell more than $2 trillion worth of debt if economic good times is still here. That's not possible. We're at the high end. We're draining the repo, and who knows what happens after that. So, again, I don't see rate cuts. I don't see them unless it's a bigger crash.
I'm wondering about the head fake. The markets start to show weakness. You lower the rates by 1/4 point. And then let's just say the inflation decides to be very stubborn. You sell off tons of this stuff with the head fake, and then suddenly the rates go back up after that, sometime months after that, Joe. Can you imagine just to get some of this stuff sold off right now, you do the head fake. So the market jumps at it, and then you throw in the 3-pointer, which is inflation, and you raise the rates more.
Yeah, I mean, I don't know how that's going to really play out. It's hard for me to see how this works. I think Bank of America is right. I think the advisory board is right. Unfortunately, they played a little trick. Hey, let's get some relief right. We don't have to deal with it now. Let's deal with it in January, and we'll talk about it later. Okay, that's fine. But these are the bigger issues that really are going to be out there, right? Which is the debt obviously isn't going down. It's only going up. The advisory panel saying, man, we're kind of at the top here. You heard me talk about some of these terrible auctions that took place, and the dealers were stuck with so much of this debt. Now, obviously, if things get bad, there will be a flight to safety. There absolutely would be, which would then allow for the government to sell more treasuries, because who wants to lose 20 and 30% in Wall Street? Right? And you would see a lot of these big investors, a lot of these big companies, they would load up on 3-year notes, 6-year notes, 1-year notes, 2-year notes, right? They'd rather get a little something than get absolutely obliterated in the stock market. But Jason, these are things, unfortunately, we're kicking this can down the road, kicking it down the road, kicking it down the road, kicking it down the road, and I think what the advisory panel in Bank of America was saying yesterday is we're running out of road.
Yeah, I think they ran out of road a long time ago, but they've just got all these little scams and then suddenly out of nowhere, COVID just pops up out of nowhere right when they needed it, right, Joe? Throw a ton of money. You actually have permission to throw a ton of money all over the world, and it's kind of pushed us here to 2023. And now you got wars broken out. They've got a couple of plays in their book, Joe. Kicking the can down the road. I think the road is coming to an end. They have to go find the new road, the reset. But how much more road? How many more kicks on the can do they have? Whether that be a 6 months, year and a half. That's the only thing. I think they don't even really know the time frame. They just look at the economic indicators and benefit as best they can, Joe. So we'll see. But it sure seems like 2024 is going to have some major changes in store.
Yeah, and again, I'll go back to what Jamie Dimon was talking about, right? I mean, who do you want to believe, Austin Goolsbee or Jamie Dimon? Patriot Radio News Hour, final segment coming up. (800-951-0592). Joe and Jason, and we're looking at all of this stuff, and unfortunately, there's not a lot of great outcomes. The government spent a huge amount of money during COVID. Got record levels of tax receipts. So they were spending record amounts, and we're getting record amounts of tax receipts. Obviously, now the stimulus is over. The tax receipts have come way down. But the problem is the government, Jason, they just kept spending. Right? They haven't lowered spending at all. I mean, we're talking about, budgets of $7 trillion plus on the federal level. There's only one way this ends. And this is how, really think about how fiat money ends. Well, it becomes worthless. Well, why does it become worthless? Well, because they just keep printing money, right? They just print and print and print and print. And then what happened? Well, I need more. Why is a $130,000 house $400,000? Well, because they kept printing the money, right? Why is a car unaffordable for most Americans now? A new car unaffordable? Well, because they print so much. The more you print, the less it's worth. And this is kind of what Bank of America is saying. Hey, the Fed is going to have to essentially bail out the government by blowing up its balance sheet. And at the same time, while they're doing that, the government's balance sheet's still going to go up $2 trillion a year on top of what's the Fed going to be buying? Are they buying $1 trillion a year, $2 trillion a year? How big does that balance sheet get? And, of course, that is supposed to be with rates at zero. I don't think they get that. I don't think they can do it this time. I don't think they can get to zero. They may be able to cut here or there. I don't know that they can get zero, which means I don't know how you get inflation to go away. If this is a mess. It is an absolute mess. In gold and silver, in my opinion, they're on the launch pad right now. They're on the launch pad and they're getting ready to go. Buy it before blast off. $10 liberties, 1 through 9, 1,090. 10 to 19, 1,080. 20 or more, 1,075. And as we said, every 2 10s you buy, we're going to get you one of those Trump mug shot 1 ounce silver rounds for you. So if you buy 20 of them, you'll get 10 Trump mugshot coins. 800-951-0592. But kind of interesting what the Treasury told us last week and then what the advisory committee said after the fact, Jason.
That's correct. So we'll watch it. And I don't think, Joe, I'll echo what you said. I don't think you can lower the rates to zero at all this time. There's a new economic system. They're trying to retool this thing. Especially, Joe, we know that digital currency is somewhere in the future. And how do you start your brand new, drive your new car off the lot and have 0% interest rates, no fuel behind that new economy? They can't do it, Joe. So I guess we'll watch.
Jason and I, we're coming right back with the half-empty cup. Follow us there.